What's going on, everyone? It's Greeny here. Welcome back to another video. In today's video, I'm going to give you a comprehensive tutorial on leverage trading. If you like my content, be sure to subscribe down below, turn on that notification bell so you stay up to date with my daily crypto videos. I'm currently running a sale on my Alpha group. This runs in Discord. It's a one-time fee for a lifetime access where you can get a bunch of daily alpha and daily conversations with like-minded crypto individuals across all different aspects of Web3, including meme coins, including leverage trades, including NFTs, a whole bunch of alpha there every single day. Now, today, what is leverage trading? We're going to start with a simple analysis about how I firstly go about analyzing whether I want to be looking for longs in the market or whether I want to be looking for shorts. Now, simply put, longs mean you want price to move up in time, and shorts mean you want price to actually move down in time. Both work well, except longs obviously have that exponential growth where they can go all the way up to a certain amount of point, whereas shorts, they can only go to zero. So there is, in theory, less upside to shorts and more upside to longs. Obviously, as you can see here on my screen, I've got the total crypto market cap. Now, I use this regularly. I check this chart every single day just to see what's happening in crypto globally. So as you can see here, we're actually quite early in the market in terms of our breakout. Now, well, that's based on last cycle. So in theory, this was actually a shorter time of accumulation. As you can see here, it was actually reduced by nearly 300 to 400 days. Now, that's quite significant when you think about the previous halvings coming in the past over here and way back here in 2015 as well. But if you have a look at today's price action, we've actually snuck out a little bit earlier than last cycle. If you see here, we didn't leave the accumulation zone until the end or after the halving, whereas here we've snuck out early, and my thinking is that it's due to the ETF approvals and just institutions getting involved and wanting access to crypto now before it gets heavily regulated / before all the top buyers are in, etc., etc. So firstly, as you can see, I established what sort of trend we're in. If we zoom into where we are currently today, I have been charting this on Twitter before, but as you can see here, we've broken up into the $1.5 trillion mark, which means we are currently very, very bullish. So that already gives me insight into the market about I probably want to be leaning towards the long side. If this was looking like a short setup or this looks like it was blowing off, so if I zoom out again and we look at the top of the last peak back up here in 2021, if I see a pump, and we start to see a blow-off candle up the top here, this is where I might start to change my thesis and look for shorts in the market because that's what the liquidity is showing me. So that's a little bit of insight into how I actually go about sort of the sentiment, whether I'm looking for longs or whether I'm looking for shorts. So leverage trading. Firstly, leverage trading is the use of smaller amounts of initial money or capital to gain exposure to large trades positions of an underlying asset. So in this case, we're looking at crypto. Okay, so in other words, you are looking to increase the amount that you can properly trade with because you have a smaller wallet. So you can use margin. So margin is just more money allocated to you by the exchanges that you're using, okay, to increase your buying power by the total amount of your margin account. So for instance, if you require $1,000 in collateral, so in other words, I have $1,000, but I want to trade with $10,000, I would allocate a 1 to 10 margin on this and use 10x leverage. It just enables me to obviously have more purchasing power and move more liquidity in to hopefully get those gains. Now, obviously, one thing you need to be super wary of with leverage trading is that it is quite dangerous. Obviously, if you are trying to increase the leverage so you actually have a higher exposure to a certain token, it means that you also increase the potential chances of this going to zero. Now, as it says here, one of your trades, for example, if it was to move in the opposite direction that you wanted it, so in other words, we're looking for longs at the moment, say a trade was to actually head in the short direction, so it's going down, okay, you amplify the potential losses, okay, so this sentence right here, all right? To avoid the catastrophic nature of leverage trading, you need to make sure that you're doing this in a really safe way, using really minimal leverage, okay, so anything under that 10x leverage would be my high recommendation. Stop losses, as it says here, is a process that I'll show you how to go about as well, but a stop loss essentially is a level at which you're happy for your trade to be cut if it was to move towards the downside. The opposite of that is a take profit. Now you can set a take profit at a certain level that you think that price is going to get to, and then that way you can set your leverage exchange to either a stop loss and a take profit level, so that when you're perhaps not in front of the charts or you're asleep, for example, your trades are safe and secure. All right. So if we have a look at the exchange that I use, so I'm actually a partner and affiliate of MEXC, so that's MEX Global. They're a super great exchange. I've been using them for a very long time, and I'm super happy with how they're going. Obviously, I'm an Australian, so that does make it easier for me to access these. So if you are someone that obviously needs some other assistance to maybe allow you to trade on these leverage exchanges, be sure to check out some VPNs to help with that process, okay? Just to show you too, so I'm obviously logged in already here, but if you are new to leverage trading, you don't have an account, you can actually sign up using my referral link. So if you head to my my Twitter profile here, and you head to my link tree here, and you open that, over here, we have a bunch of my different groups that are in. So here we are on YouTube. This is my free Telegram group. Obviously, I've got my pay group, which you can reach out to me personally through Twitter DMs if you're keen for that. But here you can see you have your Join MEXC Global link. If you click that link, it'll take you to a sign up page, and it essentially, as I'm an affiliate, it just gives me a little bonus because you're joining through my my knowledge, my education, and my access. So once you're into MEXC, so let's call it MEX Global. Okay, this is what it appears like. I might need to close some tabs because I am running quite hot right now. All right, so this is what it actually looks like once you get in there. So again, here we go. So this is the homepage, sorry. So obviously at the top we have market. Now you can buy spot. So in other words, you don't have to use leverage when you're on any MEXC. So really interestingly, the first place I ever bought Casper way back at $100 million. Now it's at 3 trillion now, so 100 million. You do the math on those returns. I actually got it here on MEXC. So you can do the spot trades here at the top as well, and you can transfer your money between your spot and your futures wallets, but essentially what we're looking at today is leverage trading, and that's to do with futures. Okay, so spot here, futures up the top. So you obviously need to deposit. You can deposit USDC. Obviously I transfer a easier token, so Solana, for example, because it's way cheaper, it's way faster. So I transfer Solana from my central exchange to my MEXC wallet. Okay, simple process, just on chain, and it gets in there. Once it's here, you go to the spot allocation for that. So say it is Solana, I then sell my Solana back into USDT, and then in your wallets you can actually swap. Once you go into your spot wallet, you can actually swap. Let's see if it works. Again, I apologize. It's just the nature of which the internet can be sometimes. So once you're in here, obviously I have no money in my spot account at the moment. So if you would like to transfer it, so you can transfer it into your futures account, and that way it's nice and easy for you to start trading with futures. So let's have a look at the futures market. So this is what it looks like, okay? There's a lot of promos, there's a lot of ads, so that's something you need to be super wary of. They run a lot of competitions as well. So there's two different ways you can go about it. Obviously you can use USDT as the primary ticker across the trade that you're looking at, or you can trade specific tokens. So say you want to trade against BTC, you can do it over there on the coin. For me, I like to trade with a stable, and that is USDT. Okay, so again, let's open this up. Alrighties. Okay, so we're on Doge right now. So I actually took a trade on this early because it was moving up, and I was super bullish on the higher time frames and obviously on the lower time frames. So here's an example of an ad that pops up. So as you can see here, this is what it looks like. Now it's super duper clunky because you've got your P&L here. So your P&L just is essentially how much money you're either in profit or you're in losses, okay? You have your stop loss value here. So that's obviously now at break even, I believe. So these little green and these little red arrows essentially just show you where you've entered and where you've exit trades on MEXC. Okay. Now, obviously, my first rule is if I'm in profit by more than 20%, I move my stop loss up to at least my break even or slight amount of profit. This way, if the market was to take a dump, I have secured my profit, because if it does come back down to that level, it will take that money off the table and I'll preserve my capital. So if we have a look here, you can obviously open the charts fully here. The yellow lines are just the simple lower time frame sort of market that I was looking at. But up the top here, you can obviously zoom out into your higher time frame. So if we really zoom out to the weekly, which is where I have been looking at Doge for quite a while. Where are we? There we are. So if you have a look here, I was looking at Doge for quite a while on the weekly. Now, as you can see here, it had this descending trading pattern. Okay, it had two actually. So we have the lower band here, and then we have the higher triangle there as well. And if you actually zoom in closer down here, which we will in a moment on TradingView instead, because that's easier to use, you could see that this point was probably going to break out within a certain period of time. Okay, now as I just said, I like to trade using TradingView. As you can see here, it's 10 times cleaner. It's a lot easier to use. Yes, they still have ads, as you can see, but I like to use this because it's so much easier. You can keep all of your coins and all your trades and all your setups in one place here. So as you can see, I've got all my top sort of altcoin picks over here on the side, which I will go through in another video. But for today's sake, we're going to be looking at how you go about leverage trading. So I've shown you the platform so far, and now I'll start to show you the skills and the things that I look for when I'm using leverage. Obviously, it's high risk, but obviously with that high risk comes that high potential of reward. Now, I allocate a small percentage of my portfolio, my whole crypto portfolio. I'd say it's below 5% entirely, probably even less than that actually at the moment, to leverage trading, just because of the high risk nature in which leverage trading is. Now, going back to what I said before, if I'm using TradingView here, you can set up a free account, okay, and you can get access to all of these things. Okay, up the top here, you can search whichever token you're looking for, and you can pop it up here and save it under the flag on the right-hand side. Now, obviously, I use my charting here. This is where I check my charts every single day, and this is where I use my knowledge, my trading, to then transfer it over to MEXC and take those longs or shorts that I'm looking for. So as you can see here, Doge on the weekly, so we're on the weekly chart up here, as you can see here, I saw a huge descending triangle, okay, with a very strong support across literally a year here. So I did know that particularly because Doge hasn't really broken out just yet, and the rest of the market, think Solana, think Casper, think IMX, for example, have been breaking really high to the upside. I knew that Doge had to either follow suit as liquidity starts to flow down from Bitcoin after it hit 40K today as well, but into those altcoins and the tokens that have a significant potential for this cycle. Now, obviously, Doge has that integration or that speculation of being integrated to X, but also associated with Elon and his upcoming space stuff. There is a anniversary coming up for Doge as well, so I did think there might have been a little sentiment punt, but also because the charts are showing me here that there was going to be a pump, this is why I took the trade, okay? So that's one particular thing. We will look shortly at some of the chart setups that I do like to look at as well, okay? And again, I'm going to show that in probably another video soon as well. But just for today, I will go through some of the simple ones that I do like to use. But as you can see here, you have all your tools across the side. So here you have your Fibonacci levels. So say you're looking for particular targets on higher time frames, you can use your Fib. Okay, you have a whole bunch of different trading singles here. So your head and shoulders, one I've used recently on Solana. As you can see here, this is your long and your short position. So this is where I've got open at the moment. So you can actually set your P&L. So P&L just means your profit and your loss, essentially. Okay, you can set those levels, and over on the side, beside the price, it'll actually tell you what it is. And as you can see here, it gives you a ratio. So this is a strong ratio. Any ratio is sort of above 2 to 1. So in other words, the profit is at least 2x to what you potentially could lose. Okay, is where I like to start thinking about taking some trades. Okay, that's just my personal philosophy around trades. There's a lot of other people that go about it in several different ways, and that's what I love about trading, is that it's heavily individualized, it's heavily established over years of experience, okay? And people trade on statistics, chart setups, on sentiment, of volume, of support and resistance, of a myriad of things, okay? RSI levels, etc., okay? And so whatever works for you, you just need to work out what works for you, okay? So as you can see here, we wanted to long off this breakout, so it did break out. Let me zoom in a little bit for you. So as you can see here, it did break out initially. It came back to retest the breakout, and that is where I love to buy. That shows me strength because it wants to break this downward trend. Okay, it's starting to set a higher high. So as you can see here, it's moved above this previous high here, and now it wants to continue up there if it can hold that support level back here. So that was a strong trade entry for me. So just going back to where we are here on MEXC, obviously this is what it looks like here. So when you are in a trade, let me, excuse me, let me just zoom in a little bit because we are quite zoomed out on a higher time frame. But essentially leverage trading is for your shorter time frame sort of trades, okay? That's because you want to move with the fluctuation of the market, whether that's longs or shorts and that sort of thing. So as you can see here, my little green arrow, which was about a couple hours ago, I did open a long just here, and it is currently in quite a nice amount of profit. you can see my stop losses down here below. Now, just to show you what this looks like. Now, there's a lot going on here. Obviously, you have your order book here, so that just shows you the levels at which people are wanting to sell their particular tokens and also buy their particular tokens, okay? I will go through all of this stuff over on the right-hand side as well shortly, but just to show you what it looks like, okay? So I currently have a bunch of different trades open. Some are doing really well, some are just needling along, okay? And hopefully they do move up quite quickly, but as you can see here, it gives you lots of details. So it shows you the amount of leverage that I'm using. So for Doge at the moment, I've got a 40x long open. Now, as I said earlier, I like to trade 20 or below, okay? Often, particularly with these sort of altcoins down here that have a smaller market cap, you don't want to be opening leverage too high unless you know exactly what you're doing. The reason for that is they have a high chance of actually turning over, and if not, tagging those support zones, okay? Those stop loss zones, okay? Whether that's volume there or that's where the order book is currently set up with, okay? And they do tag that before then moving up or moving down in the way that you're trying to trade. So I always be super careful with those trades. So as you can see here, I've got a 10x long open, I've got a 15x, and I've got a 20x. Obviously, I was very highly convicted on the sentiment side of Doge, but also the chart sentiment of Doge. So that's why I took that 40x long. The other reason I took a higher long leverage on Doge is because of its market cap. So with Ethereum and Bitcoin and Doge, obviously they require more market cap to be moved into them, okay, for it to actually receive the same sort of exponential growth as some of these other smaller market caps. So that's something to really consider. But just to show you here, obviously it shows you average entry. It shows you the current fair price, your liquidation price. So just to clarify what liquidation price is. So your liquidation price is if Doge, for example, was to hit 0.84 cents, okay, then my whole position, so my 20 USDC here would be lost and it would be liquidated. So in other words, I would lose that amount of money altogether. As you can see here, this is what we were talking about earlier. You can set your take profits and your stop losses. So for example, right now, I opened my trade back over here at 86 cents, okay? So sorry, at 8.6 cents. So I'm gonna move that right now because I'm in a really nice amount of profit. I'm just going to move that safely up into 8.7 cents, sorry, okay? So as you can see here, that shows me that I'll have a nice return of 30% if Doge was to return down to that level, okay? And that just means that if I step away for a day or two, okay, and the market takes a dump for whatever reason, okay, it means that I can at least lock in my 28% profit. Now, I will start to take some profit off the tables. As you can see here, I've got it set to a take profit of 30 cents, which is quite a ridiculous amount. That would be nearly a 10,000% trade. But I am bullish on Doge for a long time, and I could potentially see this being open for quite a while. But that depends on where the market heads and that type of stuff. So that's what the take profit and the stop loss looks like. Now, if we come over to the side here, obviously it tells you a little bit more details about your wallet, okay, your P&L analysis, over a period of week. It could be, give me data around the 24 hours that I previously traded with, give me the week data, give me the month data, okay, and that's a really good way to just actually track how your portfolio is going over time, whether you are actually trending up or whether you are actually trending down. The beauty of MEXC is that it also has really low fees, okay, and that's why I really love it, and it's super easy to transfer into USDCT, or if you are wanting to trade your Solanas or Ether Cross, it makes it super easy to get into. So for the matter of sake that we are creating a video, obviously I'm not going to probably open a trade here on Doge. But before we open a trade, just to show you what it actually looks like, there's a couple more things I want to discuss. So obviously you have isolated and cross. Now the difference here when you are trading is isolated and cross leverage. Now isolated just means that it actually gives you a really nice breakdown here. But in other words, isolated just means that this trade, the liquidity that you're using, so say it's 50 USD, say that does turn over and go to your liquidation level, okay, you lose just that 50 USD, okay? Say, however, you had cross and then it does hit your stop loss or it does hit your liquidation levels, it uses your whole entire account's money. So in a way, cross can be more safe, but it can be more dangerous because essentially you're using, say you're only $100, as you can see here over on the side, I only have $100 left over on the side. So in other words, if I was using cross and I was to accidentally liquidate a Doge call, then I would actually significantly impact my portfolio. That's the other thing. When you are trading with leverage as well, you don't want to ever exceed like a 3% trade because the cost of actually losing that trade is double generally what you have. So for example, if I had a 3% trade open, so say 3% for me was 50 USD, if it does liquidate, then that is also 50 USD that I have lost. So that's actually a 6% loss, not a 3% loss, something really to consider. So that's the difference between isolated and cross. And obviously here, this is the level at which you can fluctuate between your levels of leverage. And the beauty of it as well, it'll show you your liquidation prices, it'll give you your margin, and it'll tell you a little bit about how risky this sort of thing can be, okay? But that's essentially what those are. Now, chart setups, really quickly, I'm just going to go through a couple of chart setups. So Investopedia, fantastic site, highly recommend it if you are a novice trader and you need a bit more work to work on your knowledge around how you go about trades. As you can see here, these are some of the trading patterns that you see me post on Twitter, and it's just a simple way that I've learned how to trade over literally the last 8 years in crypto, okay? So we have a flag pattern here. Essentially, that's just a continuation pattern. So a flag on an upward slope, okay? So this is a downward slope, so that's actually a bullish continuation. But if it was to be, say, going up like this, okay, would actually be a bearish continuation. So that's something to look for, and often can signalize a reversal of sorts. A wedge, you would have seen a lot of these. Essentially, it just means it's a continuous pattern. So obviously, if it's coming from the bottom, okay, and it starts to create a wedge, then generally, because the market is heading up, okay, it's going to continue up. And this is where I go back to what I was talking to you about at the start, and how I like to take a macro perspective before I start looking for those shorter time frame trades. Wedge is very similar to some of the other patterns down below. So the pennant as well is very similar to the wedge. And essentially, it's continuation for me that I really look for, okay? So say this was price moving down into this wedge like this, it's more likely that it's probably going to continue down after that wedge as well. A wedge just means, or a pennant, for example, is another term, just means that price is consolidating for a period of time. That means that there's a low amount of liquidity there, there's a low amount of volume, and traders are just waiting to see what happens with price, whether it does reverse and go back up, or reverse and go back down, or whether it does continuate on its current trend that it's going down. Lastly, the ascending and descending triangles. Okay, so ascending triangle, as you can see here, it speaks for itself in the visual. Obviously, coming up, it starts to form this ascending triangle. A lot of the time, an ascending triangle is a continuation pattern, okay? But essentially, it is a bullish trading pattern. So this is a less probable sort of breakout here across an ascending triangle. But usually, if you're coming from a low to high area and you have an ascending triangle like this, it does mean that it wants to trend upwards as well, okay? Essentially, all of these trade setups are just probability, okay? And the funny thing about the markets is that no matter what, there is a human psychological aspect to it. There's a bit of math around it, okay? And people do trade in ways that are semi-predictable. So that's what I like to do. I like to take advantage of that by using chart setups to at least know whether I want to be bullish or whether I want to be bearish. Obviously, the last one that we have is a descending triangle. There's a lot of these that I've been posting on Twitter, obviously. More commonly than not, these are a bearish signal, okay? However, as you saw on Doge, because it was actually the low and the low of the whole entire cycle, that's why this descending triangle actually broke up on Doge, okay? The last one, this is one that I speak about very frequently that I think a lot of people misinterpret, okay? So this word is going to baffle me right now. Symmetrical, that's the word I'm trying to say. Symmetrical triangles are just, again, tell me that there's going to be a breakout in one way or another eventually, okay? It doesn't mean it's going to go up. It doesn't mean it's going to go down. I then trade whichever way it does go. So that is something that I really just want to make clear before I actually open up a trade for you. So if I have a look here, I've come over to AVAX. Up the top here, you can go through all of the tokens. You can search for them up here. So say I wanted to find CAS, for example, there it is, excellent. Or say I wanted to open IMX, okay, there it is as well, okay. And you can just scroll through there and you can find the tokens. Now, obviously we have AVAX here. The chart is nice and clean because I've just removed the grids essentially, but obviously I would be taking my trade off here on TradingView first, and then I would come back to MXC and I would open that trade, okay. But for the sake of today's video, I will just open a trade just to show you how it all works, how you can take profit, how you can close the trade really quickly if you want to get out of a trade because sentiment's changing, because there's a dump in the market for some reason, whatever it is, okay? But as you can see here, I just really loosely drew a support and resistance line. Again, I will speak to around my potential trading patterns, how I go about trading in future videos, so be sure to subscribe so that you do stay up to date with those. But here, let's take a look at this potential trade. So obviously, the market is wanting to move up across all altcoins at the moment and across the whole market in general, so that's why I'm probably going to be looking for a long in this situation. Let me just move my video. No, it doesn't want to do that. Let's go over here. just so it makes it nice and easy for you to see over the side. So again, like we spoke about before, open and closing. So open just means that I want a long, close means that you want to short the market. So let's have a look at market opening. So we want to make sure that we're opening a long. Again, I'm going to use an isolated trade here because I don't want to expose my whole portfolio to this trade. Just for the sake of this video, I'm going to reduce it all the way down to 3x, which means it's a nice and safe move. It means that I'm not overexposing my trade, my $50 that I'm going to allocate, for example, to this position, okay? As you can see here, this is a really nice tutorial, I suppose. It says that you can apply this to all futures simultaneously. So, for example, like I said before, if I'm opening several altcoin leverage trades, essentially I probably want to keep it quite consistent around that 10x or around that 15x leverage. So I would usually apply for that, but for this sake, because I'm trading on 3, I'm just going to say no. Okay. Now, the difference between limit and market is your entry at the current price. So market means you want to get in now, no matter whether it fluctuates up or down. Okay. Limit means you're setting a particular order at a particular price that you want to enter. Okay. So usually that would be probably lower than what the current price is. So you're hoping that it goes down to that level, you hit that entry, and then it moves up or it moves down after that amount. For the sake of this video, obviously we want to get in ASAP. So again, I'm just going to allocate a really small amount for 4 USD to this trade, okay? So just a couple things to know. Obviously, we are using market here. We're not using limit. So if I show you limit, if I was to say I wanted to open a long, but I wanted to open the long here on the retest down here at 21.57. So the price is over there in the gray box, okay? I would write 21.57 over in this box. I would set the allocation. I would enter my take profit and stop loss, and then I would press open and hope that the trade hits in the coming hours, okay? But obviously we want to get in the market now. The market's pumping. I've done my due diligence. I've looked at the trade. I've looked at the charts. I might have been out and about and I've only just realized that I need to get into this trade. So I'm going to hit the market option, okay? So I click market and then allocate the liquidity that I want. So let's open it with 5 USD. So my take profit zone. So again, just for the sake of this trade, I'm going to target the 24 area because it looks like we've got a double bottom here. So it looks like we want to extend up higher past this previous sort of high that we're looking at. Okay. So the structure's changed. We had high, low, high, low, high, low, and now we're starting to have lower high, lower high, lower high, and higher low and higher low over here. And again, we've had a higher high previously here and here. So the structure is changing. So this shows me that the trend is towards the long side. So that's why I'm taking a long again. Okay. So again, the take profit, let's set the 24 level. So I just type in 24. That shows me that I'm going to have a 20% return. But because obviously I'm only using $5, 20% of $5 is just shy of $1. So that's why it shows that. My stop loss, I'm going to set it below this low here. So that's how I like to trade as well. So that's a change in structure. If it was to say roll over here, price was to roll over here, let me draw this for you. So say price was to roll over here and head back down, but actually break this sort of level there, okay, and head down here and create a new low. That shows me that the structure of the trade, the structure of the pattern is starting to change, okay? So that is one thing that I like to be aware of and make sure that I have access to as well. So I set that stop loss. So if we have a look at the stop loss before the previous low was 21.52. So I just put in 21.52. Now a couple of things, oopsies, 0.52. Okay, as you can see here, it's actually a loss of 12%. So in other words, I will lose I will lose 12% of the amount that I put in. So $5 is just over 50 cents, okay? Now, as you can see here, because I've been doing this a long time, I can do the math in my head, but that is just shy of a 2-to-1 trade. So that's quite an aggressive trade, okay? I usually like to have a ratio of at least 2-to-1, but you can, just as a reminder, use this little tool over on the side to do it all for you. And again, this tool is fantastic because it essentially puts the numbers that you're trying to access over on the side as well. So it makes it a bit more particular. So so if I want to enter my take profit at the previous high of 24.09 and my previous stop loss is going to be 21.499. So again, just makes it a little bit more accurate and it makes me nice and comfortable. So just a reminder, we're on the market, so it's going to open the trade immediately. So if I press open like this, it's going to give me one last window, and you can select for this window not to be open, but I always like to just have this open. It's going to give you one last detail, so it's showing you how much you're allocating, okay, based on the leverage that you have. It shows you the amount of leverage you're using. It gives you your TP and your SL. It gives you your liquidation. So if this trade was to go south, which it's not because we have set a stop loss already, so it's going to hit that stop loss first, okay? So it's going to lose the amount that I lose first. before hitting liquidate, okay? And then it shows me the margin used. So I click confirm and bang, it'll shoot it out. And as you can see here in real live time, okay, it shows me that I have currently in a negative trade. So red shows negative and green shows positive, obviously. It shows my take profit level and it shows my stop level, my stop loss level as well, okay? Again, if I scroll down a little bit on the screen, it's going to show you here all the details that we discussed earlier, okay? And a couple things, obviously, now that I am in a trade that I maybe want to cut, essentially, it allows you to do a couple of different things. So you can close along at particular prices or close it at particular levels, okay? Again, you can add different stop losses. You can edit your stop losses here if you want to. So say I only want to take 50% out at 24 and I want to ride the rest up to say $30, okay? I can allocate 50% of the trade there and click confirm, okay? But obviously we want to do all here, so we're going to click confirm again. And you can allocate that. You can delete your stop losses and your take profits and re-enter them if you're more bullish or you're more bearish. So you just want to make sure that you can have that flexibility, and that's what I really love about MEXC. It's super easy to use. Lastly, obviously, you have this little button here. This will give you your current take profits. Sorry, not your take profits. This will show you your current profits or your current losses. Okay, so obviously here you can see my Doge trade is going really well. Lastly, we have a couple different things. So reverse means that if you want to actually reverse your trade, so say you've longed something to a particular level and now you want to actually short it, okay? That's what reverse is. For me, I don't like to use something like that because it can increase the amount of fees that you're trying to use for your particular trade. So no, I like to clean cut my longs, clean cut my shorts, and then maybe enter my own shorts or longs in my own way, okay? Flash close just means this trade would flash close at the current price for obviously a significant amount more than you would hit by entering your take profit or your stop loss. Again, market opening via the market or using a flash close will cost slightly more, okay, than doing a limit open or a limit take profit or a limit stop loss, okay? So something to be aware about on fees. But as I said earlier, the fees on MEXC are super nice, okay? They're not very taxing at all, particularly if you have a larger wallet, obviously. So if I just have a quick look at a previous trade. So for example, I had a PITH trade open yesterday, I think it was. You can come over here and it can give you all the details. So again, let's have a look at this just for your history's sake, okay? If it wants to open it for me. So again, this is where I share my trades to Twitter and stuff. It gives you that nice little graphic, okay? Once it wants to shoot this open, but it will give you your profit or loss amount, and it'll give you the price at which you got in and the price at which you got out. But it's not going to show me that. It's the same one as the Doge one that I just showed you before. But it does usually tell you how much. Here. So if you open view history, it's also going to tell you how much the fee actually cost, and you'll actually see that it's not too much of an amount, hence why I like to use MEXC, okay? So essentially, that is a nice little, we might as well take a loss. We might take a 0% loss here. So essentially how it works with, say this Avalanche trade here, say I want to get out of this trade because it is going sour and I really want to get out. I click flash close, okay, it's going to pop up. It's going to tell me that I'm going to lose 0.2 cents. Okay, it's going to close it. I'm going to see this pop up on my screen. You can turn notifications on. You can make the sounds appear so that your computer's telling you these things. And then over, obviously now in my position history, I'm going to have that slight loss, okay? So that's a tutorial for MEXC Global. If you do have any questions, please comment below. I'm more than happy to do more videos around this in the future and help educate you all on this, because I am aware, obviously, that leverage trading is new to a lot of people, and it's great to see, or at least it's great for me to sort of educate you around that. So please comment down below if you have any questions. Comment down below any feedback that you have, or if you want me to clarify anything on the exchanges, more than happy to do so, okay? Don't forget to subscribe. Don't forget to hit that notification bell. I'm uploading daily videos to crypto, daily videos to here on YouTube, so stay up to date with my content. Please follow me on X, okay? And again, don't forget, I'm running that sale on my alpha group on Discord. We've been absolutely printing lately. If you want to get in that, be sure to comment your Twitter handle down below or send me a DM on Twitter. I've opened my DMs to everybody on Twitter, so you can reach out to me if you'd like. That's all for today. Thank you so much. As always, take care, and I'll see you again soon.